Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, let's take a look at the equity markets. The equity markets still are range bound. So what we'd like to do is talk about some of the positive and some of the negatives that we're seeing in this market. So if we look at the S&P 500, basically since the January 26th high has not been able to recapture that, hit a new low on February 9th, and pretty much tried to rally from there and found resistance at 2,800. So that's a negative. And of course, the volatility has just increased since that time, something like we haven't seen all of last year. So that's again a sign of indecision and a lot of distribution, meaning the down days are coming in on heavier volume than the up days. So that's a negative. Okay, so what are some of the positives there? Well, basically, the February 9th low still has not been undercut, meaning the S&P has been able to find support right around that 200-day moving average, right about the 2,600 level. A few weeks ago, March 23rd, we hit a pretty bad low on Friday. S&P just undercut that slightly and just continued to trade up. And we moved in a trading range for the last 2 weeks. So that's a positive in the sense that there is some support in this market. And again, last Friday we sold off, but we still stayed above that March 23rd high, and we still stayed, March 23rd low, and we did still stay above the February 9th low. So again, that's a positive. And of course, this morning we're bouncing. So anything can still happen at this point because the negatives are we see a lot of distribution, a lot of volatility, not a good thing. But on the other hand, we do see some support. Pretty much the Dow paints the same kind of picture. Now we look at the NASDAQ, again, there's a lot of positive and negatives. Some of the positives are that we did make a higher high after that February 9th low, and we still haven't even come near that low. The NASDAQ has stayed above those levels. NASDAQ has not even come down to the 200-day moving average. But still, again, right now it's finding resistance at the 100-day moving average, and the volume on the down days has been much heavier than the volume on the up days. So again, conflicting signals, and if you're a short-term trader, you're going to get chopped up. Now, looking at individual stocks, some of the liquid leading stocks, again, a little bit of a mixed picture. And the stocks I've mentioned before are Amazon, Nvidia, and Netflix. And it looks like they're starting to lose support, but again, this morning, they're finding that support again. So again, conflicting pictures, but some of those leading stocks are continuing to act well, and that may, perhaps, once this market resolves itself, may point which way the market's going to go. So what's a trader doing in this situation? Well, it looks at this point like breakouts are not working, so that's the thing you'd like to stay away from. If you do want exposure to equities, probably look at things that are finding support, whether it's the 50-day or 65-day, bouncing off those levels. You can try those. And of course, if it doesn't work, your stop can be very short right below those levels. But of course, this isn't a trade recommendation. You always want to consult your financial advisor, see if any of these trades are for you or if you should be in the equity market at this time. That's your choice. But the point is that price and volume is giving us a mixed picture. There's a lot of positives, there's a lot of negatives. One of the big positives I see is that if we look at a monthly chart, whether it be the S&P, the Dow, or the NASDAQ, it's above its 12-month exponential moving average. And why this is important, over the last 20 years, anytime we've bounced off this area, the uptrend tends to continue. Now, if we get a correction below this area, that could be drawn out for maybe 4 or 6 months or longer. So right now, I'd keep an eye on those. Take a look at a monthly chart, put up a 12-month exponential moving average. We're still above that right now, holding that line. If we drop below it, things may get worse. It's anyone's call at this point. It's a news-driven market. So as I always say, let price and volume be your guide. Have a great trading week. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.